This is Fintech Insider News. This week, Visa halts its open banking operations in the US amid regulatory challenges, Square makes its roadmap open to all, and we take a look at the latest supermarket price increases that's got everyone fuming here in the UK. We'll be discussing all of this and more in today's news show, so don't go anywhere.
This episode of Fintech Insider is brought to you by Fireblocks, the stablecoin infrastructure platform trusted by top global businesses such as Visa, BNP Paribas, Revolut, and more. Fireblocks powers over $100 billion in monthly stablecoin volume, helping PSPs, fintechs, remitters, and banks issue, move, and manage stablecoins, all securely and with built-in compliance. Get complete control to build your stablecoin strategy, manage liquidity, and on-off ramp in over 60 currencies, all at scale. Learn more at fireblocks.com.
Hey, it's Paris. You know I love sparkly things, right? Like stars. Duh. And thanks to Hilton and AutoCamp, I just slept under them. Picture me, serving looks by the fire outside my luxurious Airstream, making s'mores with the kids, while a national park is our backdrop. The great outdoors meets Hilton hospitality. That's hot. Explore all the new ways to stay at Hilton.com. Hilton for the stay.
Hello and welcome to episode 993 of Fintech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks, and fintechs to build the next generation of financial services. I'm Kate Moody, Customer Strategy Director here at 11FS, and this is a part of the intro where I'm supposed to tell you everything I've been working on this week, but this week is actually my first week back from maternity leave, so I'm actually cheekily just here to pick the best brains in financial services about all the latest news to get myself up to speed. So selfishly, I'm therefore delighted to be joined by a brilliant lineup of guests who know the space inside and out. Let's meet our panel. First, we have a very exciting Fintech Insider debut for Grant Evans, VP at WorldPay for Platforms. Big welcome to the show, Grant. Introduce yourself to our listeners and your role at WorldPay, please.
Yeah, thanks for having me on. Excited to be making my debut. I'm VP Sales and Partnerships at WorldPay for Platforms. That is the PayFac integrated payments and embedded payments engine of WorldPay. We're currently operating in the US, Canada, Australia, New Zealand, and the UK, and I head up our UK commercial teams.
Fantastic. Well, yeah, definitely looking forward to getting your perspective on some of our stories today, and welcome to the show. Next up, we have a Fintech Insider return for Megan Caywood Cooper, founder and CEO at Caywood. Megan, always a delight to have you on the show. Welcome back. What's going on in your world?
So since we last spoke, I've been building Caywood, of course, which is my wealth management fintech company, exploring how agentic AI can reshape financial infrastructure. And that's been accelerating, but I've also then stepped into strategic advisory. So I've been working with banks and regulators globally on how AI and digital platforms change their operating models. And then this fall also I'll be speaking across North America and Europe and Asia and publishing a book on agentic AI and finance. So it's been an intense season, startup building, boardroom advising, global thought leadership. But for me, the main thing that I'm really excited about, and that is the common thread for me, is around agentic AI and how it's not a side note, but it's the next leap. So that's where I'm focused. And
Awesome. Well, I know you're going to have a lot of super interesting perspectives as we go through today as well. So thank you very much for taking the time out to join us. And last but not least, we have Oliver Smith, Head of Content at Money 2020 Europe. Again, big welcome back to the show, Oliver. I believe you have a new job. Could you tell us a bit more about it?
Yeah, 3 weeks in at Money 2020 Europe. Just landed. Lots of work to do. The show, we've got a year, which sounds like a long time, the 2nd to the 4th of June, 2026, but it's going to come really, really fast. For those of you who don't know, Money 2020 is Europe's biggest and best fintech and finance show. 8,000 delegates come along each year to hear about what's going on in the industry. Over 450 speakers, and that is our job. Our job is to find the best and the brightest to come and grace our stages and tell us about what's coming up in fintech and finance. And the work has started already. We're already on the hunt. So if you or anyone you know should be on our stage, then please get in touch with me.
Awesome. Well, yeah, time flies when you're coordinating like an amazing global event. So yeah, I'm sure it'll come around in no time at all and you'll smash it. So thank you for taking the time out to join us as well. So we have a panel, and now onto the news. As ever, a ton of interesting things going on. So our first story we've taken from Yahoo Finance, but it's been covered in lots of places, and that is Visa halts open banking operations in the US amid regulatory challenge. Visa has shut down its open banking division in the US due to regulatory ambiguity around consumer data rights following the CFPB's move to overturn the existing open banking ruling in the US, with uncertainty rife about how much any new rules will change things or if a new rule will ever be put in place. Visa's decision comes amid rising disputes between banks and fintechs, with major banks like JP Chase and PNC considering charging substantial fees to grant access to customer data. As a result of this, Visa have said they will redirect their open banking efforts towards Europe and Latin America, regions that have clearer, more favourable regulations requiring banks to share data with licensed third parties. I'm guessing you've probably all got a take on this. So no offence taken if I'm not, I don't pick on you first, but Grant, I'll come to you first as Mr. Payments. Why do you think Visa's pulled the plug here?
Look, I think it's probably a little bit of frustration, right? I mean, it's something that's come after 5 years of hard work getting to a point before this decision where open banking was looking like it was going to go completely the other way in the US market. And then the news comes out that the U-turn had happened, and there's maybe an air of frustration there, or an air of, we don't actually need this at the moment. We've got other markets where things are going in the right direction. There's maybe a little bit more understanding around the real benefits of what open banking can deliver. The AISP, account information service providers side of things in particular, is a huge enablement tool for a whole host of different sectors, and to kind of be turning your back on that in this way is really, really disappointing for the US market in terms of the charging element of that particularly, I think, because there's accessibility that comes with better credit scoring, loan accessibility, affordability, huge amounts of benefits that come from that side of open banking. And then the payment initiation service provider or pay to bank side of things, that's something I think people expect to pay more readily for, but potentially against a card payment where they're used to paying fees. But from Visa's point of view, they have Tink in the background, and Tink's an established European operation spanning into new markets. And I think maybe from their point of view, they've just thought we maybe don't need to be playing the waiting game any longer than we already have been out here.
Yeah. Megan, what's your perspective? Is it kind of a short-sighted move by Visa or a strategic, sensible choice?
Yeah, I think it's very sensible. I think when we look at the history of open banking, it was first announced as PSD2 in Europe in 2014 or 15. And then it was fall of 2016 when the UK announced open banking. That was like the sister policy to that. They had the Competition and Markets Authority kind of do this review of the landscape and why banks needed to provide APIs. And one of the clear premises was around enabling competition and innovation, very much recognizing banks don't want to do this. So we're going to use a regulatory stick to mandate it. So it's a little bit odd in the US, the kind of power that the banks have to influence it, because by definition, they're not wildly incentivized to open up this data, because that is one way that they monetize, is by holding that customer relationship. But it's more around competition and for customers. And then I think that gets to the other question, which is what they're debating here, which is, should we charge for this data? Which from a UK and European perspective is no, because while it's the banks and financial institutions' jobs to keep that data safe, effectively that's the customers that they should be able to share securely to be able to access different products and services for them. But I think what entrenched that in the US is the US has been slow on the regulation. They haven't mandated it. There's been a complete lack of clarity from a regulatory point of view. Back in 2020, I believe it was, I spoke with a number of U.S. banks on it, and they were considering having an initiative kind of between themselves. But the reality was, Plaid was so entrenched, they had proprietary APIs and connections that were already built that were effectively giving them what they needed. And so because of that, it made sense that Visa back in, I think it was 2020, they tried to acquire them for $7 billion. The U.S. regulator shuts that down from antitrust concerns, which then leads to the Tink acquisition. But as a result, what we've seen is a very different environment spin up, where the U.S. has proprietary APIs. You have a private system. Banks still largely own customer data, whereas in the UK and EU, customers very much have a sense of ownership of that data. They can share it securely. There's more competition. There's more innovation. There's stricter regulation that enables that. And then what I think is really exciting, though, is like if we look to the next decade, what I'm really excited about within agentic AI is how we can enable financial services to have this more autonomous element to it, that money on autopilot. And that is actually premised on platforms and APIs. So what I think will be really interesting is over the next decade, since we have this maturity in the UK and EU, what that means for the competitive landscape for the next wave of innovation. I think what Visa's done is really smart. They're looking at what they have with Tink in Europe. They understand what's not happening in the US. They're just kind of embracing reality as it is. And if I were in their position, I would make the same decision.
Yeah, and I'm obviously keen to bring you in as well. I mean, do you see this as just a pure Visa issue, or does this ripple across the whole American market?
Yeah, I mean, open banking, the promise of it really only works if it's a level playing field and if all the banks are signed in and you go to a provider. We can't have a system where you can only connect your financial apps to certain banks and some don't work. And I think that's the mess that I think Visa saw coming down the line with some of the movements from JP Morgan and others. And I think they decided to retreat from that. That's definitely a negative for open banking. It's potentially a positive for Europe and those other markets that Visa are pointing to, because it means that we are now ahead in a way because we have that level playing field. It's not perfect, but it certainly looks a lot better than the US right now. So yeah, I think I do feel sad though, because I think the promise of open banking is somewhat under stress in the US at least.
Yeah, no, absolutely. I suppose, Megan, from a builder's perspective, I'm interested. Yeah, do you think, to Oliver's point, will it create a difference for people that are looking to create platforms that maybe could scale across multiple markets if you don't have that data landscape in the US? Will it just stop innovators from moving to the US full stop?
Absolutely. I think so, because I think what's really interesting is if we look at the past decade of innovation, I would say it's all about digital transformation and automation, making financial apps that are easy to use, and then starting this journey of connectivity, building platforms, open APIs, and ways that these companies can interact and share together so that no company has to be really heavy and vertically integrated with one company performing lots of different functions. Now we have this really neat way in the UK and Europe where we can connect and integrate via these open APIs and have a whole other opportunity to innovate in this space, which doesn't yet exist in the same way in areas like the US. And I think what that will translate into is my perspective on the next decade of innovation is, whereas we've just finished this work on automation, the next one is around augmentation, or making better and more intelligent services for customers, because what AI really brings in is that intelligence layer. And in finance, a lot of people, even though now it's easy to access and open different accounts, there's still that question of what do we do? How do we do it? And that's a layer where I think AI has this huge opportunity to help come in and help people make better financial decisions. And the edge that's really unique now is, I think, the agentic part, which is, we've been talking about it for probably half a decade in banking, but that technology wasn't quite there. But which is, how do we help people effectively create a financial plan, fully understand their financial needs, set the goal, set the outcome, but then enable us to basically have this autopilot element of then just doing it for them, like kind of within these kind of preset bounds. And that's what is effectively coming down the pipes. It's no longer around the rails, what we used to call the dumb pipes. Now the dumb pipes are getting dumber, because even when you have the APIs, unless it has that agency in it, where we're enabling AI within the corporate to take over some functions, like, it's not just create a treasury report, but it's like, managing liquidity, these types of shifts that we can have in terms of how we structure and integrate AI. But it's also on the consumer side, which is predisposed with data sharing and APIs as a foundation. So I think the next 10 years of innovation will lean towards those who have that connectivity and the platforms in place. So that would be UK, Europe, Hong Kong, Australia. Those areas that have built out this landscape will be predisposed to have a natural first mover advantage to building that agency into it.
Yeah, no, I think that's super interesting. Grant, obviously we've talked about how maybe the US loses out, potentially from this move from Visa, but obviously Visa have said that the trade-off is that they're therefore going to double down on Europe and Latin America. What impact do you think that will have on those markets? Do you think we're going to see any interesting things, any interesting plays coming from Visa in these markets?
I think it was really, really interesting when the schemes bought open banking platforms, because there's, when you talk about the payment side of things, it was always seen as a bit of a threat to core card processing. But when you look at the wider payments ecosystem, as from an acquirer point of view, most acquirers have either bought or partnered with an open banking platform. I think we see the benefits from things like customer onboarding journeys, where open banking has been deployed to speed up the applications, KYC, KYB, all of that side of things from a data point of view. And payments-wise, there's been certain sectors that have adopted open banking a lot better than others. Higher average transaction value sectors, potentially, where they've looked at the cost. There's still the argument around consumer protection. I think what Visa are doing that's really interesting with their wider sort of enablement program is starting to offer consumer protection for pay-by-bank transactions, has been talked about on the Visa side, and that will remove one of the big barriers we've seen from a pay-by-bank point of view when putting it alongside card payments. I think we maybe as acquirers get a little bit of a hard time sometimes, where people just assume that we're card only, that we don't have these massive payment tech stacks which have all of the payment methods. I think we see ourselves more than just a card acquirer these days at WorldPay, as most payments companies do, because of those wider tech stacks. And I think that with Visa pulling tink more heavily into their core value proposition, that's only going to be a good thing for businesses that are running on Visa's wider network rails. So it'll be interesting to see how they double down on that. I think in LATAM, we obviously talk about Pix, and I know Pix has probably been widely talked about in terms of A2A payments in markets where there's maybe less core banking accessibility. And I think if Visa are going to start pumping money into those markets to maybe offer different solutions in that sense, and open banking is a part of that, then that's going to be really exciting for LATAM as well.
Yeah, Ollie, I don't know if you've got any particular perspectives on LATAM. Obviously, we've seen Mexico and Brazil moving closer towards having open banking regulations in place. What do you think is going to happen in those markets?
Well, a point I just wanted to bring in, I really believe in the vision that Megan was painting about agentic finance and what's going to happen in the future. I guess what I think about is the funding environment for a lot of companies in that space, because the story has been for a long time that you maybe start in Europe, but the growth story is when you expand to the US. That was, the path that many companies went on. I guess my concern with the fragmentation of open banking is whether it stops that growth journey for a lot of companies, or at least the story of that growth happening. And a lot of the investors are coming from the US as well. So are they happy with investing in a potential future that doesn't exist in their market? Sorry, I know that wasn't the question you asked, but it's just something that was coming to mind there.
No, I think it's a super interesting point. It would be, obviously there's huge challenges there. It would be really interesting to see, if that narrative shifted and it became more about, maybe you start in Europe and then maybe you scale, maybe you look at LATAM next, or, maybe you look at Asia next or Africa next. Megan, what do you reckon?
Yeah, I was just going to say, because I completely agree with Oliver's point, because the reality is there's a lot of venture capital that flows out of the US, and there's a question there, if the growth story is predominantly hinged on the environment and platform infrastructure that we have in UK and EU, does that kind of inhibit some of the funding because they couldn't flow to that direction as easily? I think my prediction, this is just my hypothesis as to what will happen, is that I think this next wave, this next decade of innovation hits on what David Breyer often says, digital finance is only 1% done. I think that's absolutely true, because I think what AI will bring into finance, particularly agentic AI, will be so transformative. It will have way larger effects than what we saw over this past decade with digital transformation around automation. That what I think will happen is when competition starts to leapfrog in UK and Europe and show the art of the possible, the US is so competitive that infrastructure, it's not impossible to build. They could do it within a 12-month period. I think it'll put pressure on them and CFPB to actually kind of get things together, really push from a concerted effort in order to put that platform and infrastructure in place. Because to have agency, you have to have the APIs, you have to have the rails. That's how the agency works between different organizations. That's the connectivity layer you need. And so when they kind of put two and two together of this is the art of the possible, this is the infrastructure we need, this is the regulation that we've seen globally that enables it, I think that will actually put a fire under them to catch up. So I predict the US will quite quickly then invest in it. Then quite quickly they'll, heavily be building different, fintechs around this area. The venture capital will pour in. And I mean, it's kind of the inevitability. I think people almost have AI fatigue. It's so cliche that it's obviously going to transform the market. But I think once there's greater visibility as to what needs to exist in order to enable that in its fullness, we'll see investment naturally flow to those areas to enable a more globally competitive playing field.
Watch this space. Well, I get the sense we probably could talk about this the whole show, but we have more news to cover. So I'm going to move us on to our next story. And that is Square mixes Bitcoin, loans and kiosks in open roadmap. Square has made its product roadmap public to increase transparency, build trust, help customers plan and invite feedback. Upcoming improvements include simplified printer setup, making offline payments default, and expanding offline payment capabilities across more tools. More broadly, sellers may soon be able to qualify for loans as early as their first week using Square, apply for credit cards without pre-approval, and accept Bitcoin payments integrated with a Bitcoin wallet and the option to convert part of card sales into Bitcoin. The roadmap will be updated every quarter with changes and reprioritization driven by seller feedback and evolving needs. Grant, what do you think of Square making its public roadmap public? Did you jump straight in and have a rummage?
I did, yeah. First and foremost, I think everybody in a commercial environment would love to have access to an internal roadmap and an external roadmap constantly. And I'm someone that's preached about that. And there's definitely organizations I've worked in previously where I've struggled to even get an internal roadmap, let alone an external market-facing one. So maybe this is the way forward in the future. But the embedded finance element of that, the sort of loan capability, we just talked about open banking. Obviously, I suspect there's probably an element of open banking being utilized to actually drive, and AI as well, to drive some of the decisioning that's going on there to offer a service like that. I suspect they probably have an internal roadmap somewhere behind the scenes as well that looks slightly different. But this is a great starting point. I think from an open and honest point of view, payments is more. We call it kind of frenemies, I guess, in our world. There's more collaboration happening between different payment companies than ever before. And it can often be the way that when someone releases something like this, the whole market starts to follow suit and we end up in a better end position for all of the merchants, platforms, customers that sit sort of further below the supply chain or the user chain, if you like. So I think it's a really smart move. It's obviously a great PR play from them as well, but it's interesting for us as a competitor of theirs in the market, I guess, to be able to see what the competition is doing and building. And you always want to make sure you're keeping your own product roadmap up to speed with the wider market. So yeah, if all of our other competitors want to share their roadmaps openly as well, then I'm sure we'd be pretty happy for them to do that.
Megan, what do you think the main driver is for Square here? Why are we doing this?
I think it's brilliant. I mean, it reminded me of when I was at Starling. It was probably like 2017 or so when I remember Anne and I were having a conversation at one point. We're like, let's create an open product roadmap. And I remember sitting down with her and we were like opening a Trello. We literally had it on Trello. I don't really remember if you guys remember this open roadmap we had, but we took our high level trajectory that we had at Starling from Jira. We didn't put it like item by item, but we had the big chunks of what was coming up and when. We had like what we're currently working on, what's coming up next, what we've just shipped. And the reason why we did it and why it worked well, and so why I think it will work well for Square, is because when there's a lot of excitement around what you're building, your customers want to have a voice. And they want to see that you're listening to their voice. And so the great thing about the roadmap is saying, we've heard you, we're prioritizing that. That's coming, but here's what we're working on now. And so that they can see what you're working on currently, they can kind of get that sense of prioritization. And so they're not just mad at you ignoring it. They see that you're a finite company, you have to prioritize things, here's where things lie. They also can then have a voice around moving things around in the priority order if you want to listen to that. But then also it gives them just kind of a set standard of expectations as to when things are coming. And that's quite useful. And I think what also really worked, and kind of almost echoes what Grant is saying, is that when we had our open roadmap at Starling, Monzo had published one as well. And I remember between the two of us, it created this really nice competition. And because we had the visibility of what the other one was doing, you don't know exactly how they'll do it, but kind of broadly like what they're aiming for. It creates this really fun competition. And I think that moves the industry forward quite well. And I think we're all working in the space where we all care about customers. We want to build innovative, cool products. It's all fun. We want to, of course, win. But I think generally that sense of transparency, enabling customers to have a voice, committing to something, leaning on it is great. I will say it's mildly terrifying though, as a product person, because you commit to something and then things can happen, things can go wrong, things can come up. And then you have to have that really solid communication to explain when the roadmap changes. Like, I know I committed to this, but now this piece of regulation has come up and sideswiped us. So now we're doing this, or whatever it is, So it's a fine art to do it well, and it creates a lot of pressure, but ultimately I think it's a really good thing, and I'm excited they've done it.
Oliver, have you had a look? Was there anything in it that particularly piqued your interest?
I haven't had a look, but I as a fintech nerd, this is great news. And I remember clicking through the Monzo and Starling roadmaps with such excitement in the mid 2010s. I think the challenge, longer term is whether the internal stakeholders who have helped to get this off the ground continue to support it going forward, because I think these roadmaps sometimes get launched and then sometimes fall by the wayside when, as Megan was saying, priorities take over, regulation comes in, and suddenly the roadmap is so disconnected from the current state of the product and the future of the product. But I hope Square don't, make that mistake. I hope they keep buying in, because I really support it, both as a former journalist and as a fintech enthusiast.
Yeah, I mean, I had a look. It's going to sound so petty, but I was a bit underwhelmed, I suppose, by like the design of it. It's just like a big long list. I think I was expecting it to be like, I think my base level expectation has been set by, I think there's a fintech that we talk about a lot on the show called Up in Australia, and they have a public roadmap that they call the Tree of Up. And if you go look for that is like as everything Up does, it's like beautifully designed, and it's like a sort of graphical experience to interact with this tree and to kind of see all the different items. And they've really kind of grouped all of the different things they're working on by sort of themes and structures and stuff like that. So maybe this sounds deeply ungrateful, but yeah, I was a bit underwhelmed by like the presentation of it. But it is a very long list, I suppose, and I suppose it brought to life for me just how enormous Square is. That in Q3 alone, they are planning to ship all of these different integrations and all of these different things. So grant you. Does that scale of development frighten somebody like WorldPay, or do you kind of look at it and think, no, like we're matching this, we're doing exactly the same? Like, what does the speed of potential product release do to competitors?
No, I think that there's a couple of things for me. Obviously, I get your point on the simplicity, but it also shows that they're very much SMB focused as an organisation, right? The sector sets are quite narrow. I think there's 4 different sector sets that they hone in. They're kind of keeping it simple in terms of this is where we're strong in market and that's where we're going to stay. And I think also in terms of if you're going to share an external roadmap like this, yes, full fintech nerds and experts are probably going to unpack that in quite a lot of detail. But if I'm just a coffee shop owner and I want to know, this would be nice to have for my payments, like, is there a reason why they've kept it so simple with it being external that, any SMB can go in, find their sector there and understand, I guess, in a fairly basic sense, what those new product releases are going to be and how that might actually impact their business. So there's probably some method in their madness with the way they've done that. I think UX and UI, anyone can have an opinion on in terms of how something presents. But I think in terms of like that SMB focus, they've kept it quite clean. And I don't think from our point of view, it's anything that's kind of intimidating in that sense. I think the market is moving at quite a nice speed collectively. You've had challenges to the likes of ourselves in the market that aren't really challenges anymore in the sense that they've been around for 15 years in their own right. There aren't necessarily newer challenges in payments now. It's a much more established ecosystem. There's some older players and some newer players, but I think that gap in terms of deliverable products in market has really narrowed quite a lot, which is why we really hone in on things like service support, relationship management as an organization now, which really does tend to stand us apart in the market. Our partner success team in platforms, I couldn't live without the people in my partner success team. They're absolutely superstars. So I think it's fair play to them for releasing it. We'll see what happens with our roadmap in the future. I'm sure there'll be some interesting conversations internally about it anyway.
Yeah, watch this space. And then the other thing I wanted to get your perspective on, particularly, Grant, was a lot of the content of this roadmap is Square doubling down on reliability, especially around offline payments. What's your take on why they're really zooming in on that now at this moment in time?
There's been a few outages recently, I guess, in Europe, in ATM world, in other payments environments recently, where people have lost that reliability, I guess, in terms of we get very used to not carrying wallets and everyone uses Apple Pay and Google Pay and some of that's been challenged over the last 12, 18 months. So maybe they're leaning into offline. You've also got things like aviation, rail. They might be pivoting more towards that kind of travel ecosystem and hospitality because that's a strong, market segment for them. But in order to dominate in the airline and broader travel sectors, an aeroplane thousands of miles in the air and trains going through tunnels, things like that, you need really good offline capability in order to operate in that market. So maybe there's some strategy around scaling up their hospitality proposition into maybe slightly less traditional markets for them historically. I think we've certainly seen the likes of SumUp and Zettle and people like that kind of go down that road previously as well. So it would be a natural evolution for Square to be looking at that market also.
Yeah, Oliver, I wanted to get your kind of take on the move into hospitality. Do you think there's a real opportunity for Square to major in that space?
Yeah, I mean, potentially. Just talking about the offline first aspects as well. My dad runs a flower shop, and I've seen firsthand just how, especially on Valentine's Day, the queues going out the door, and it's really mission critical. And retail is a really difficult environment. There's natural things that happen. There are floods. The Wi-Fi goes down. Basic stuff. And I think payments. As we move to this digital payments being the crux of these businesses, we need systems that we can rely on even when the Wi-Fi goes down, even when the power cuts. How do we keep business going? I think about my dad when I read this and how it's so critical to his day-to-day life. He's got to be able to take card payments every day without fail. It's great to hear that there are, Square's investing in that.
Yeah, absolutely.
There's a fraud risk that comes with that, unfortunately, as well, though. Your payments stack up and then there is a risk of bad customers, unfortunately. You'll see it when you get off an aeroplane an hour later, maybe that coffee that you bought pings up on your phone when it's actually finally been registered. So if I was your dad, I'm not sure I'd be trusting a load of strangers that aren't regulars with £100 bouquets of flowers on Valentine's Day for offline payments. How they navigate that is always a business decision as well. But certainly there is a little bit of fraud risk that comes with offline payment capabilities as well.
For sure. He has learnt that the hard way. So yeah, definitely.
Oh gosh, well maybe that'll pop up in the Q4 section of the Square's roadmap. We'll have to wait and see. Okay, on that note, we're just going to take a quick pause here. We'll be back shortly.
With a major selection of the looks your kiddos love, starting at just $4 in the Walmart app, a new school year means a stylish new them. Who knew? Find skater skirts and Crocs that say, I'm casual but cool. Sparkly sneakers that say, it's my classroom, you're just learning in it. And preppy polos that say, I'm the teacher's pet, even if they're mommy's menace at home. Find their favorite styles starting at just $4 in the app. The Walmart you thought you knew is now new.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
All right, folks, so here's the deal. There's something very exciting coming up on the FinTech calendar, Money 2020 Riyadh. And no, I won't be there. But while the team is jetting off to Saudi Arabia, I'll be holding down the fort. But that doesn't mean I'm not completely buzzing about what's going down on the ground. From growth markets to the movers and shakers of global fintech, this one's shaping up to be a serious moment for the industry. So here's what to do. If you are heading out there, keep an eye out for our crew. Yes, mics will be involved. And maybe even snag a chat if you've got something smart to say. And for the rest of us, make sure you're following Fintech Insider across all the socials so you don't miss a thing. I'll be watching, posting, and probably sending some jealous DMs. Catch you online and have a blast in Riyadh. Okay, back to the news. Our next story comes from the American banker, and that is Revolut offering free subway rides to new NYC customers. Revolut is offering new customers in New York City up to 5 free MTA subway or bus rides via 100% cashback on tap-to-pay fares using their Revolut card. The Ride with Revolut campaign runs from August 22nd to September 20th. Eligible riders receive cashback on up to 5 single rides, each costing $2.90, with total cashback potential up to $14.50. This initiative highlights Revolut's US growth strategy, showcasing its broader money management tools from seamless international transfers to multi-currency accounts and budgeting features. Megan, is this smart customer acquisition or just a flashy promo?
I think what Revolut's always been really good at is customer acquisition. You know what I mean? Like from the early days, they know how to use certain behavioral economics to scale. And right now they're very liquid, I would say, in terms of their kind of profitability that they've had, and they have a lot of money to reinvest to grow their customer base. I think when they're looking at the US where they want to expand, doing loss-making introductory offers like, free rides in New York City to new customers is sensible because that's what they're really focused on. They have a great product. They're continuing to want to scale it. The US is a key focus market. They have money to spend on advertising. They've always been quite willing to do that. So I think it makes sense for them. I don't think it's right for everyone. I think a lot of new startups come out, and particularly in New York, I think it comes under critique. That's often happens. You get some new app that's, focused on finding restaurants, and you get so much off per meal at a restaurant. And it's so loss-making that the startup can quite quickly go under from acquiring so many customers, but not making any money from them. But I think it's a completely different framework when you consider it for Revolut, given their position, the amount of profitability they have, the amount of, investment that people want to put into it, should they want to raise more investment. It's really all systems go, I think, on them continuing to scale and increase customer numbers. So I think it makes sense for that particular market and how they're approaching it.
Interesting. Oliver, what do you reckon?
Yeah, I think there's going to be great word of mouth from this. I think, people telling their colleagues, oh, I'm traveling for free this week, I'm not paying for my transit. I think word will spread very, very fast. The question is, when the campaign ends, what happens then? Do those customers stay with Revolut? As Megan said, I think they're so savvy when it comes to these promotions and getting customers through the door. So I have no doubt that this will be a huge success for them. I think these transit campaigns are maybe less successful than they were years ago when colourful bank cards, we all do Apple Pay now, so you don't see the cards as much. But I think the word of mouth will still help them win this. And yeah, I look forward to seeing their customer numbers in the US in the years ahead.
Yeah, I mean, I'm intrigued to see how well it does, because I feel like it'll be a good read on like New York consumers, right? Like how important is $15 in the US? I think it'll be useful to kind of get a steer on that.
Yeah, I mean, it does, like, I was just thinking through that, actually. It does indicate the type of customer they're going to pick up is probably kind of younger, typically, maybe a new college graduate working in the city, someone who's a bit more financially minded. For the established professionals working in banking in New York City, maybe a little bit less provocative. But I don't know. Everyone loves to save money. I love a good discount or promo code. So Lord knows, like, I would probably still use it if I was there new to Revolut. So yeah, it'll be interesting to see how it does and which particular customers they pick up with it, and if they use it fully. So yeah, exciting times.
Yeah. Grant, bring you in as well. Do you feel like this is going to be the kind of a starting point for your Revolut's growth into the US?
There's a bit of guerrilla marketing in there, right? Isn't there? I mean, I'm sure they'll be splashed all over the subway from an advertising point of view as well. You've got to think outside the box. I mean, I'm all for creative campaigns. You had Monzo issuing Greg's sausage rolls out of a cash machine in Newcastle in the UK. There was good PR that came from that, and that was, advertising their premium card where you had a monthly paid fee, right? And they probably picked up a load of customers that now get a free sausage roll from Greg's every month. I don't think it's a case now of people not using these cards as their day-to-day spend cards. I certainly use Monzo as my day-to-day card. They probably still have an element of challenge against the traditional banks. If we looked at like the CMA9 in the UK as the comparison in terms of are people getting their salaries paid in and paying their mortgages, I think that's the gap that these banks now actually need to close. Is yes, you're going to have £500 or a few £100 or whatever is your day-to-day spending fund on there, which is great for a subway alignment like this if they want to get more switcher traffic for people using those day-to-day spend cards. But are you going to do your core banking with Revolut? I think something that they have done that I would call out is, seeing as we talked about open banking at the start of this session as well, is their Revolut Pay deployment has been really, really smart in terms of pay by bank for Revolut customers with Revolut merchant processing businesses to get better pay by bank adoption and help save business fees on that, but also getting their users more familiar with pay by bank as a payment method. I think that was a really smart product rollout. I mean, they like to challenge the status quo. I think, smacking a new headquarters in the middle of Canary Wharf is a bit of a hey-ho, guys, to the ones that said they wouldn't get a banking license, right?
Yeah, no, absolutely. I think it's a really interesting point. I completely agree about people being more willing to spit out their sort of everyday spend onto some of these new platforms and new cards. I think from a customer perspective, when I've interviewed customers and asked them to kind of categorize kind of different types of their money, I think transport spend is actually a really interesting category of spend, because for some people it sits in that everyday bucket because it's something that fluctuates and changes, and for some people it sits kind of closer to your utilities and your bills because it's something you just have to do, and it's not you having a coffee or going out for lunch with a friend. It's kind of something that feels less fun. So I do think there's an interesting sort of behavioral design component to it. Is you might have moved your fun spend over to a Revolut card or a Monzo card or a Chime card or something like that, but if you move your transport spend across, maybe you're starting to make that sort of mental leap of like, this is a slightly more serious part of my money that I'm putting in this space. So I'm really intrigued from a customer behavior perspective to see how that plays out, Megan.
Yeah. I was just thinking, like, as you said that, one thing I bet Nick and the team are doing at Revolut is looking at what worked really well for them as they expanded in the UK and in other markets. And I remember back in the day when it was early days of Revolut in the UK, they did a lot of advertising on the tube. And I don't know if you remember like Chad West leading some of these, but I remember he had one that was particularly provocative. It was something kind of cheeky around Valentine's Day. And I just remember it went so viral because it was kind of on the edge of like appropriate for like fintech products, but it was hilarious. And it got into like, various headlines. And I remember they really focused on commuters. And to be fair, they don't have a typical high balance per card. And yet they're like dominating in terms of customer acquisition and overall profitability numbers. So I bet what they're doing is putting two and two together, which is saying we've done these marketing campaigns, we attract these types of consumers, and no, we don't necessarily get huge amounts of deposits, but then that leads them to using all these other things. Like they offer quite a bit in terms of connective partnerships that then give them other discounts, and they're probably seeing this discount, and people who want discounts then see this discount, which creates, an ingrained usage in the app. And then, maybe they find crypto trading and all the other kind of stuff because they're in a digitally savvy young segment or whatever it is that they profit off of. But I'm wondering if that's actually the thing, which is they've seen how it works, the kind of customers they get. Now they want these types in the US. So it's, it all kind of makes sense that they're really good at this commuter focus.
Yeah. The other thing I wanted to get your perspective on, Grant, is, is there like a payments data play to this for Revolut? Like, do you think there will be value for them in trying to hopefully increase the amount of transactional data they receive around how customers are traveling, where they are, when they're in certain destinations? Will that be a factor, do you think?
I think there's a couple of benefits. So, if you're picking up day-to-day spend, you're obviously growing your interchange revenue as well. So if you pick up small incremental day-to-day spends at massive scale, there's an interchange benefit to revenue for them in that sense. And I think also once you've got a new customer acquired, the way that the challenger banks, they're not even challenger banks anymore, neobanks, whatever you want to define them as these days. Again, it's that they're not new anymore, right? But they're still delivering great new product quicker than our legacy players can. But once you've acquired that customer in the first instance, what they're brilliant at is cross-selling other products and services. I think, again, go back to Monzo, they're starting to get this right with their 2 different premium card bands now. I know most of my friends that use Monzo have gone maybe at least to the first tier, some to the second tier, because you're getting, free phone. What do people do often? They drop their phone, smash the screen. They don't want to claim insurance, so it costs 400 quid to replace it. So that was an obvious upsell to get people going to Monzo Premium because you can get your phone screen replaced. Like, they're really, really savvy around how they think about the age demographic of their customers, and that's the data they're probably really tapping into, is like, what is our average age demographic and what products can we then use to upsell to get more of that day-to-day or more core wallet spend, if you want to call it that, but also to upsell other products and services that will increase our bottom line. And I think that's something that they're starting to do in a really, really clever and efficient way now.
Yeah, absolutely. Well, we'll see how this campaign plays out, and as always, keeping an eye on whatever Revolut is doing. So we'll be coming back to you with more updates on their moves and shakes in the US. Okay, on to our next story. We're taking this one from Finextra, and that is CommBank reverses plan to replace call centre staff with AI. The Commonwealth Bank of Australia, also known as CommBank, has reversed its plan to cut 45 call centre jobs in favour of an AI-powered voice bot, calling the decision an error. Contrary to the bank's claims that AI would reduce calls by 2,000 per week, call volumes actually increased. This led to staff being offered overtime and team leaders stepping in to handle inquiries, a clear indication the AI rollout didn't deliver as planned. CBA admitted its redundancy assessment didn't fully account for real business needs and called the initial decision a misjudgment. Megan, probably no surprise, got the word AI in it, so I'll come to you first. What do you reckon?
I really appreciate that this story was included because I think it hits on one of the biggest misconceptions around the possibility of AI in finance. I think for years now, everyone wants to use AI as a chatbot, and any of us have used it, and they're all terrible because it's not AGI, it's not general intelligence, it's not the LLMs, it's not the same as talking with ChatGPT. It's predictive AI, it's, a fancy decision tree, and you end up in this really unintelligent experience where you're asking a question, it completely doesn't get the answer, and then you just kind of end up stuck, and you actually just keep trying to find a way out of it to get to talk to a real person. And what you end up doing is creating a poor customer experience and higher call volumes, and that's quite predictable. I think the thing that's the underlying part here that I'm really excited about is once we do shift to understanding the difference in types of AI, the thing that people will realize that's only known, I would say, by the earliest adopters of various Gen AI tools like ChatGPT is how emotionally intelligent it is. It's something that I think has probably been my biggest epiphany this year, that its emotional intelligence not only can match a human's emotional intelligence, it exceeds it. It's shocking. I went to the State of AI event that was put on by Northzone a couple of months ago, and there was maybe 100 people. It was hosted by Sir Stephen Fry. It had Mehdi, the product director of DeepMind, leaders from OpenAI, and it had the ex-chief of MI6. It was this crazy interesting event, and I remember someone pointed it out. It's not only in the future will it be medical malpractice for a doctor to diagnose someone without the sign off of their AI. Similarly in finance, we think that it's going to be really brilliant at being like a CFO via API, but there's more than that. The ability to relate to an individual psychologically about their money, to be able to emotionally relate and handle those kind of fears around money and that kind of emotional intelligence is actually far better than a human's capability. And that's the part that I think is not very well known. So few people have like kind of tapped into that in their use of AI. Like right now, like I would say there's buckets of people when they use ChatGPT, a lot of it is like fancy Google. And then there's like the academics who see it for the brilliance in research. And then there's some AI agents in corporates where you see it as taking out a lot of low-level entry jobs, particularly in engineering, where you can see where it can replace skills quite quickly. But I think the real lift is over the next probably 12 to 24 months when people understand the strategic nature of it and the emotionally intelligent nature of it. But what that means in terms of the types of AI you have to integrate to enable that, it's not all AI is made equally. So like predictive AI is a very different thing from what exists in ChatGPT. Delta Airlines chatbot is not even close to the kind of experience you'd have with, ChatGPT or Opus or Claude or one of those. And so that's where I think the real shift will happen. So it makes sense they rolled it back. I think it's a predictable error. I don't think it will persist. I think there's a big opportunity actually for customer service to be replaced by AI, just not that tight. I think predictive AI is just not good enough to solve it, especially with high anxiety financial questions. It just doesn't make sense to do that. So I think until they're ready to integrate it properly, it's better to just leave humans to to manage it for now.
Yeah, I mean, again, that's still very much a unfolding, I think, news story kind of as we record this. But there's reports out today about lawsuits against OpenAI in the States after tragic cases where young people have interacted with ChatGPT and have gone on to take their own lives and to commit self-harm. So I think it feels like there is a really potentially huge opportunity, but also as this technology evolves, huge risks and potential like harms at an individual level that we need to be learning from and observing. So I think in the financial services space that will be huge to watch, right?
Well, so I think it's a really good article to point it out because you see some on both sides, some where the companionship, it's like people will use ChatGPT like a therapist or a friend in like a good way, and that's good. But then I saw that article today that you're talking about the 16-year-old Adam Rain who took his life as a result. And what had happened is effectively he went in, he was very depressed, he was suicidal. And so of course he's asking ChatGPT for help. And ChatGPT has a lot of safety nets built in for this. So it would point him to, suicide hotlines. But then what he did is he devised a character say, oh, it's not me. I'm doing this character as a hypothetical. How would this character do it? And you can very easily kind of get around it. Like hypothetically, how would you do it if you would? And I think the critique there was ChatGPT should have put two and two together, that he's asking for himself and still found a way to block it and to help him up level. And I think there's some really fair critiques there and it needs to be improved because the reality is people are definitely relating to it as a companion, not just as a tool. And that's what that's hitting at. And so they're just still, I think, figuring out all these nuances of okay, we have these systems and safety nets, but then when people try to get around them, how do we circumvent that? It's quite nuanced because the companionship is quite deep.
Yeah, absolutely. Grant, obviously, as we covered in the previous story, you guys don't currently have a public roadmap, so I'm not asking you to divulge all of the kind of deepest, darkest secrets of WorldPay, but, how does CommBank's experience of AI influence how you guys at WorldPay are thinking about pulling AI into what you're doing?
Yeah, I think you look at CommBank, but you also think about Klarna. Not so long ago, did a very public PR piece around all the cost saving that they'd made and how many staff they'd managed to remove from the business. And then just a matter of months later, rolled that back and said it's all gone horribly wrong and we're missing those people and we're going to be hiring again and backfilling and going back to the way we did it before. So if it's not the right timing or it's not quite the right setup, as Megan said, it's, you really have to think about how you're going to deploy these things. And I think there's a market angle to it as well. In the UK in particular, and there's competitors of ours that we certainly win business from where they've maybe lost that human element, and that can be in customer support, like you've got with CommBank here, partner account management. What can seem like a really small query to a customer can actually be quite complex for them sometimes, and they need a better understanding, and maybe they're not going to get that from AI or a chatbot, and they do need that more, I guess, heavy-handed human interaction to take care of them. So our big thing with AI is more agentic commerce and where that's going to be going, because obviously it's great for us in one side because we're going to see more volume potentially in terms of spending in the market with people setting AI on a course to actually do shopping for them and spending for them. But also the fraud element of that, we spent years working towards biometric and OTP verifications that need human interaction so we know who that actual customer is. And now we've got the capability with AI for us to potentially not easily know who that customer is. So as a payments company, we need to navigate that and think about how we're ultimately knowing who our end customer still is, or to make sure that end customers have authorized the agentic AI to actually go and spend on their behalf. So there's a few challenges we're facing with it, but we're also really, really excited about the opportunity that comes with agentic commerce as well, and the AI benefits that's being delivered by that.
Oliver, I'll give you the final word on this one.
Thank you. The thing that I guess comes to mind when I think about financial services and AI is that we are very much still in that sort of experimentation phase. And when I hear stories like Klarna, when I hear about CommBank, I'm in some ways I'm happy to hear them, because it shows that people are experimenting and trying things. They're getting it wrong. That's okay. It's good to learn. On the Gartner hype cycle, where are we? I think we're in the heady period, but maybe we are coming towards that sort of lower period where people are starting to realize the limitations. But I'm optimistic, a bit like Megan, I think, optimistic on the potential. And I'm glad to see there's experimentation, but sometimes that does go a bit too far and needs to be rolled back a little bit.
Absolutely. On that note, we're just going to take a quick pause here. We'll be back shortly.
11FS Pulse is where financial services comes to benchmark its customer experiences. Home to over 17,000 hand-picked user journeys from over 800 brands, Pulse showcases best-in-class UX that covers everything from onboarding and payments to investments and business banking. By using Pulse, Monzo was able to cut its product research phase by 90%, and they're not doing too bad. Want to see what all the fuss is about? Book your demo with our in-house experts today at 11fs.com/pulse.
Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, but we think you will find just as interesting. We're taking this one from Fintech Futures, and that is Bunq hit with €2.6 million fine by Dutch central bank. The Dutch central bank fined online bank Bunq €2.6 million in May 2025 for serious shortcomings in its anti-money laundering or AML controls. It found that Bunq failed to properly investigate and report suspicious transactions between January 2021 and May 2022 across 4 customer cases. Bunq strongly disagrees with the fine and has formally lodged an objection. The bank stated it takes its role as a financial gatekeeper seriously and has since enhanced its systems using advanced technology. The fine marks part of a broader regulatory crackdown in the Netherlands. Other banks like ING, ABN AMRO and Rabobank have faced large penalties or prosecution for similar AML compliance failures. Well, I think obviously this is difficult for Bunq, and the fact that they're protesting against it shows that they're not necessarily in agreement with the findings. But I think what we've seen broadly across the industry is, as all of these fintechs and neobanks build their customer bases, for the vast majority of them, there is going to be some sort of growing pains around that. There's going to be some challenges to kind of get the AML controls up to the level they need to be. I don't think this necessarily shows that Bunq is failing per se. It just feels like it's a sadly very common thing that these platforms are experiencing as they grow. And kudos to the regulator for stepping in, for giving them the same level of scrutiny that they are giving to these other banks. But obviously, if you look at the levels of fines applied, obviously it sounds like a lot of money. I do not personally have €2.6 million lying around, but those sums are dramatically smaller than the fines applied to the likes of ING and ABN AMRO. So yes, Bunq have made some mistakes, but it sounds like they're fixing them. And now they've hit 17 million customers, and similar to Revolut, they're also looking to the US for growth. So in many ways, maybe this is coming at a good time for them if it helps them to really kind of refine their processes and get those into a good place ahead of their next stage of growth. So fingers crossed for Bunq as they continue their growth journey. And finally, now time for something a little bit lighter to finish this week's news show. Taking this story from The Guardian, and that is, a customer's feeling raw after Tesco adds 25p to price of a meal deal. Tesco, a UK supermarket, has raised the price of its popular meal deal by 25 pence, bringing the cost to £4.25 for non-club card holders. This marks the third increase since 2022, reflecting ongoing inflation pressures. A 4.9% annual rise in food and non-alcoholic beverage prices, driven by supply issues like droughts and heat waves in southern Europe, has impacted costs. Some shoppers expressed disappointment, questioning whether the offer still qualifies as a deal. We covered this story actually in our 11FS weekly bite-sized newsletter and shared our own outrage at this story. So you can subscribe to that newsletter by clicking the link in our show notes. So do go give it a read. But keen to get the panelists' take on this as well. Oliver, are you a Tesco meal deal fan? Are you outraged by this?
I am a massive fan, and I'm absolutely gutted. The price has been creeping up for the last few years, though. It's really. I remember when it was in the £3, and now the low £3, and now £4.25. Crazy. I think we all know where this is going. The £5 meal deal is the future. Tesco's heading there. It won't be long. I'm sorry to break the news to everyone.
Megan, maybe give us an international perspective on this, right? Because do we just take the meal deal for granted in the UK? Is it something that's unique in the UK, or does it exist in other places as well?
No, it's totally. Subway, has their meal deal in the US, so it's a thing. But there's not as many meal deals, I would say. And I would say with Tesco, my office in London is right near London Bridge, and there's a Tesco right outside of it. And I went in recently. I hadn't been in ages and getting a meal deal, and I got the meal deal. And I was like, I text my husband, I'm like, the Tesco meal deal is such a deal. How in this economy with this, sharp price increases everywhere, that you can get anything for under £5. I was like, this is insane. I forgot about what a good bargain it was. So now, honestly, that's increased up. I already thought it cost more than that. So I was just impressed as, prices have increased everywhere so heavily that I can still get such a deal. So I'm not mad at Tesco. I'm just, I'm with Oliver, though. It'll probably be £5 before but it's worth it. It's delicious. It's excellent. You can get your chicken Caesar wrap. I'm going to be a spokesperson for Tesco anytime now.
Well, that was going to be the next question. What is in the dream meal deal? Grant, what's your dream meal deal? You're allowed, I've been told, again, for non-UK listeners, a meal deal involves typically a main sandwich, or kind of it could be a pasta or a wrap or something like that. So a main sandwich, pasta, wrap, drink, and snack of choice. So yeah, you're allowed 3 items. What's in your dream meal deal?
I'll just say on the Tesco piece, someone told me a Freddo costs over £1 now. So with that breaking the pound barrier mark, I'm not surprised about the Tesco meal deal. But yeah, my slightly controversial one would be I am a Marmite lover. So the cheese and Marmite sandwich, the humble cheese and Marmite represent the British staple there. I'm going to say a pack of candy kittens as the snack, because those things are just epic. You can't go wrong with candy kittens. And drink any sort of fruit water. I've got into the fruit water sort of world. That's sparkling fruit water has gone mad in the UK, hasn't it? So any of those that catches my eye on the shelf.
Fair enough. Oliver, what's your go-to? Not your go-to. Sorry, we're talking dream world here. So dream meal deal.
Oh no, well this is my go-to. I'm a traditionalist, so BLT sandwich all the way, bag of crisps, sweet chili sensations maybe, and a Pepsi Max to finish it off.
Oh, okay.
Nice.
The drinks choice, I think, to me is the most controversial. Megan.
Yeah, I am. So a little fact about me is I don't really mix up what I eat. I find something I like and I stick with it for a decade. So this is my Tesco meal deal. I get the chicken Caesar wrap every time. It used to be a ham and cheese sandwich back in 2016. I shifted. So now chicken Caesar wrap. And then for a period of time, I was Quavers because those were British and I hadn't had those before. It was very exciting. But now I've discovered Whatsits, which are British Cheetos, and I love those. So now I'm over to the Whatsits. And then for the drink, I'll be honest, Oliver, I like Pepsi Max, but I usually go for the Pepsi Max Cherry. If I do Pepsi Max, I'm a little bit more lenient. I can do a Diet Coke. I can do a Coke Zero. I can do a Sprite. I'm pretty whimsical. The flavored waters also, Grant, I feel you on that. I'm a little bit less, picky about my drink, but any of those options are good. But yeah, definitely chicken Caesar wrap, crisps, some sort of diet beverage.
Oh, absolutely. I think I haven't actually had a meal deal in a while because I've been trapped in a house with a baby. So my time to sort of bumble around Tesco's at lunchtime has been minimal. But now that I'm re-emerging into the world, I would definitely have to go get one just to re-establish myself. I think I would probably go for a wrap of some sort because I'm a very clumsy eater and wraps are just generally more contained than sandwiches. So I think there's less chance of me kind of spilling something all over my front, which is what inevitably happens. Drink, I do have a Diet Coke dependency issue. I don't drink coffee, so that is my caffeine source of choice. But it's reached the stage, I think I do need an intervention because it's reached the point where my 4-year-old now says, Mummy, would you like a Diet Coke? And I'm like, oh no, this is not a good This is not a good precedent to have set. And then snack of choice, yeah, I think it would have to vary on mood. Sometimes it's crisps, but sometimes, it's got to be like a Kit Kat or something. Sometimes you just got to sneak some chocolate in. But again, depends on the energy levels of the day. But no, I mean, I think I'm intrigued to see. Yeah, we haven't really seen. We talked earlier about Revolut's move into kind of the transport space, but yeah, we've not really seen many. I feel like the meal deal could also be an interesting, everyday area of spend to kind of focus on. What if a new entrant into the UK market gave you 3? Oh God, this is my worst nightmare. 3 free meal deals. That'd be a game changer.
It's inspiration for Caywood now.
There you go.
You get 3 free Tesco meal deals if you invest with my wealth management.
You heard it.
I'm signing up.
I've got my first customer.
Awesome. Well, that wraps up today's FinTech Insider News. Thank you so much to today's guest. Where can people find out a bit more about you and your companies, Megan?
So for me, you can find me on LinkedIn as Megan Caywood Cooper. And then for my company, it's Caywood.ai. And I don't really use X anymore, but I used to. And that was just at Megan Caywood. So if you want to find me there, I don't have a lot on there, but there it is.
Awesome. Grant, what about you?
Yeah, very much on LinkedIn and YouTube more latterly as well. So G Evans Payments or The Payment Shed.
What did you do on YouTube?
Payment Shed stuff, yeah. So I got a newsletter and podcast, I dare to say. Sorry, guys.
It's fine.
Not quite the level of 11FS, but yeah.
We're all friends. It's all good. Oliver, what about you?
Yeah, you can find me on LinkedIn or even drop me an email, oliver.smith@money2020.com. I'm on the hunt for headline speakers for Money 2020 Europe next year, so I'd love to hear from you.
Awesome. And as for me, you can find me on LinkedIn, Kate Moody, or drop me an email at kate@11fs.com. Thank you so much for listening to today's FinTech Insider. If you like what you heard, please make sure to follow us on your favourite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider or email podcast@11fs.com. Thanks again and goodbye.
Ever wondered which UK bank or challenger has the best set of features? Well, thanks to 11FS Pulse, you don't need to wonder anymore. With its industry-first benchmarking feature, 11FS Pulse allows you to directly compare the holistic financial offering provided by traditional banks and digital challengers to see who is better serving their customers. Using Pulse's exclusive scoring metrics and jobs to be done methodology, dive deep into what makes each product stand out, from unique hero features to everyday banking necessities. And once you're done with benchmarking, there's another 17,000 hand-picked user journeys in Pulse's library for you and your product team to explore. Book your demo today at 11fs.com/Pulse.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.